Welcome back to another episode of PSL Daily Download, your first stop to all things real estate in Port St. Lucie. Today is April 23rd, 2024. My name is Jaime. We got a lot of good stuff to cover this morning. Let's get started. Inventory. Inventory decreased across the board. On my tracker, everything went down. Total inventory dropped from 2298 to 2290. It was also reflected in our pricing under 375 and our pricing above 375 right over here. We could also see kind of a pretty sizable drop from homes that were currently reduced in price. So I'm assuming that most of these may have actually closed, let's say on Friday or Thursday, and they're finally being reflected on realtor.com as closed. So we saw the drop from 650 to 633. And again, those are homes that are on the market that have been reduced in price. Lastly, homes that are currently for rent dropped from 378 to 374. Not too big of a drop, but 1% there. All right, so overall month to date, we're still above 3% increase in inventory overall, 3%, and the biggest of that coming in for homes under 375. As you can see, it has increased 13.21% from 492 homes to 557. All right, let's go to Mortgage News Daily's daily rate survey. One of these days I won't get jammed up with that. They had the 30-year fixed rate as of business close yesterday at 7.43. That was a drop of 0.01%. They had the FHA at 6.91, a drop again of 0.01%. Now, I started getting updates on rates. It looks like they have actually increased about 6 basis points or 0.06 on the pricing, not on the rate. I'll continue to emphasize that so that way there's no confusion on that. All right, let's go to the market. All right. So it looks like the big three here, the Dow Jones, NASDAQ, and the S&Ps are all up. And I mentioned in yesterday's video that the S&P had actually been up, or sorry, had been down for 6 straight days. It finally snapped that losing streak yesterday, it being up, and it looks like that trend is continuing this morning. They're up 52 points, and it keeps changing on me. The 10-year yield, again, that tracks mortgage rates the most, or mortgage rates tracks the 10-year yield, is at 4.588. That is down 0.035, a drop of 0.757%. Now, I just mentioned that the pricing actually got worse overnight, and we can see pricing here on the Treasury yield is actually getting better. So if this trend continues, I could expect some repricing to a lower cost or lower price on mortgages. So we'll keep an eye on that. And lastly, I wanted to end the show by with a Financial Times article, and this talks about there's a part of the market that's actually expecting rate increases, right? That was something that we couldn't even think about it happening coming into this year. Like there was no way that was even in the conversation. As a matter of fact, I believe, like I had also mentioned yesterday, there were like 6 or 7 rate cuts priced into the market, which we are now down to 1 or 2. And actually, this article does touch on that. So let's get started on the article. Financial Times, let's see here. Investor price in growing chance of another Federal Reserve interest rise. While base case remains reduction in borrowing costs, option markets show a 20% probability of increase. All right, which again, that is also my base case. I do believe at some point here we will get rate cuts. We just don't know when. All right, traders have built up bets that the Federal Reserve could raise interest rates again, a once unthinkable prospect that highlights a shift in market expectations after a stronger than expected U.S. market economic data and hawkish comments from policymakers. Option markets now suggest a roughly 1 in 5 chance of a U.S. rate increase within the next 12 months, up sharply from the start of the year. So again, All bets were on lower rates. It looks like there's a chance we may actually see the reverse of that. All right, and we'll jump down a little bit. Traders' central expectation is for one or two rate cuts of a quarter of a percent point each this year, down from 6 to 7 in January. It continues to say, at some point, if the data continues to disappoint, then I think the Fed will have to start re-engaging on hikes, said Richard Clarida, an economic advisor at PIMCO, who was previously vice chair of the U.S. Central Bank. Clarida, I'm assuming that's how you pronounce it. Sorry if I butchered that. Added a rate rise was not his base case, but was a possibility if core inflation climbs back above 3%. So this is perfect timing. On Friday, we are also getting the core CPE report, which will show kind of where inflation is going without a lot of those variable, volatile items in there, like oil, and I think groceries also be taken out, but or food. So the important here is that this is not what everyone expect, but there's a growing chance, and at worst, I would say it's it's in the conversation, meaning that maybe it'll result, maybe not in a rate increase, but for them to be again just longer, higher for longer, or they'll start coming down but slower. So something to keep in mind. Lastly, I wanted to touch on, everyone's expecting for when the Fed to come out and say, hey, we're dropping a quarter of a percent, for you to turn around and your mortgage rate is now possibly a quarter percent lower. And that doesn't always work out that way. We've seen over the last 8, 9, 10 months since the last rate increase, that the Feds have not moved the rate yet. We've swung basically 2 points up and down, 1 point down and up during that time. So it's more of the expectation of what the inflation is going to be. Even if the Fed drops the rate and the market's like, whoa, that was maybe too early. We think that inflation is going to be stickier. We may see the mortgage rates stay the same, maybe come down a little bit. They could stay the same, but there's a chance they could also go up if the market believes that that will happen. Again, that's not the base case. That's not what normally happens when the Fed drops it, but it's a possibility. So hopefully you got a little information on this article. I know I found a lot of value in it. If you did, please click that subscribe button. I'm gonna go ahead and link the video for you to catch up on yesterday's, because I did touch on a few things if you didn't watch that video. So I'll put that there for you. Other than that, I hope you have a great day, and I will see you guys tomorrow. Bye.